Hey there, it's Tom Ryan, founder and CEO of ICR. Before we get into the next episode, I wanted to ask that you subscribe to the show. It'll help us get even more unique and interesting guests on the podcast and in turn continue to educate management teams and the growing ecosystem that creates value for fast-growing private and public companies. And while you're at it, head over to Apple Podcasts and leave us a 5-star rating. Very much appreciated.
The environment is challenging. There's still opportunities in that environment because there's not a lot of well-positioned restaurant groups right now with an appetite to grow.
The restaurant industry has never been easy, and the past few years of the pandemic have made that doubly true. But some innovators see it as an opportunity to grow.
We have an unparalleled commitment to driving long-term success through guest experience, which I think it's the way that will ultimately win the game.
Being a public company can be hard. Small missteps can have outsized consequences. I'm Tom Ryan, founder and CEO of ICR, and over the last 20 years, we've helped thousands of companies understand and navigate the stock market and the media. We'll demystify these and other increasingly complex stakeholder groups so you can focus on what you do best, building your company, and unlocking your true potential. This is Welcome to the Arena. At a time when many restaurants are cutting back on what they offer guests, the One Group is raising the bar in terms of the dining experience they're delivering, and in the process, positioning themselves for incremental success. My guest today is Manny Hilario, CEO of the One Group and longtime friend of ICR. The One Group is a global hospitality company that develops and operates upscale and polished casual, high-energy restaurants and lounges. Their two primary restaurant brands are STK and Kona Grill, where they aspire to be the global leader in vibe dining, a unique combination of casual, upscale lounge and restaurant experiences. They trade under the symbol STKS. Manny joined the One Group as a board member in April of 2017, and in October of 2017, he became president and CEO. Prior to that, he was CFO of Sizzling Platter and was COO in Einstein Noah Restaurant Group. Manny began his career at McDonald's, where he held various financial roles in the company. On this episode, we talked about the One Group's bold approach to hospitality, their growth strategy, and of course, their unique vibe dining concept that is setting them apart from the competition. Let's enter the arena with Manny Hilario.
The restaurant space, as you know, has many operators. They all aspire to provide high-quality dining experiences. They all have a super high commitment to great food, great service, and providing a good environment for the guests. Vibe dining is an elevation of that. It's really an experiential view on dining, which means we provide all of that which you would get in a fine dining or a polished casual dining environment. However, we put extra care into setting up an environment where it's just a little bit higher level and you feel immersed into the experience. So that's why the music, the lighting, the interaction with the staff is super critical, as well as we have fantastic bar programs with very compelling drinks, and we try to utilize your visit to the restaurant to also get you involved with our bar program. So it's a combination of all that, but at the easiest way of remembering it is that once you're in vibe dining, the experience is memorable, and you will walk out of there wanting to do it again. So it's kind of what I consider to be the highest level of dining possible, because it's off craveable, it's off energy, it's off having lots of fun in the environment.
For those that don't know, STK or Kona, are the customers of the two brands interchangeable, or is it a little bit different?
STK is in the steakhouse group, and it all starts with great steak. So we believe that we have one of the best steak programs in America and frankly in the world, super high quality steak. So we position ourselves as a steakhouse with a vibe component. And then the Kona Grill brand, we position ourselves as a great American grill, meaning great seafood, great steak. And then really what makes Kona Grill stand out is the commitment to the bar. All the restaurants have a magnificent bar where we've put emphasis on great cocktail programs as well as a great happy hour program. And since we've taken over the brand at the One Group, we've really emphasized the energy in the bar and music and the engagement between our staff and the bar customers. So what's really unique about then the Kona Grill is that. And then on top of all of that, as the cherry on Kona Grill, is we do have a very unique sushi program. So you get the best of an American grill with all the regular fare, but then we have sushi, which is frankly something that people love to go out for. Particularly, we think that we skew heavily on the female demographic on that part of the program. Probably our most direct competitors will be groups like Hillstone by the Houstons, a brand which brings in the same kind of elevated grill and upscale, polished casual feel to the dining experience, except we believe that we'll bring an added value with our energy into the program.
How many STKs do you have here kind of domestically and internationally, and how about Kona?
Yeah, so we just opened our 25th STK. We're super excited about that. We opened...
Congratulations.
Thank you, sir. We opened Dallas last week, and previously to that, we opened San Francisco. So 2 fantastic flagships. As a matter of fact, we just announced in our earnings call that San Francisco had been averaging about $350,000 a week in volume, which makes it an extraordinary high-volume restaurant in the restaurant space itself. And then Dallas is in a fantastic location in that market, and we've been very pleased with that. And then we have actually another STK opening this weekend in London, so we'll have opened 3 STKs within a 90-day period. So we're super excited about the velocity of that opening schedule. And going into next year, we have 3 more planned. We have Charlotte, and then we also have Boston and Washington, D.C. Obviously, as you can tell from the cities that we're going into, our strategy there is to try to get to all the big top 25 DMAs because the brand is extremely hot right now and the volumes have been extraordinary. So we're really trying to close out the big DMAs. Kona Grill, we have 24 Kona Grills right now. We have 3 of them actually all under construction, somewhere between 50 and 85% complete. So we will be bringing those 3 new Kona Grills online in January, February, and March of next year. So super excited about the growth here. As you start putting these numbers against our bases, it's double-digit unit growth for both brands. And then Kona Grill, after our run in the first quarter, we also have 3 other Kona Grills that we plan to open in the back end of 2023. So we'll be taking Kona Grill up to 30 units here within the next, call it 15 months.
Given the current environment, as we sit here in November of 22 with inflation and input costs, are you feeling good about kind of the ROI expectations for new development? Is that relatively in the range of kind of prior numbers?
Yeah, I think that obviously the environment is about as challenging as we've seen from an operations perspective. We have pressures on all the input costs into the business, and obviously the big question now is what is the impact to the consumer? So far, our observation has been that the consumer has been spending, and particularly the high-end consumer, which we attract lots of them with both brands, seems to be more resilient and continue to spend. So we feel that our exposure to consumer is actually at an elevated level of consumer that helps you through environments like this. So we feel very good about that. As a matter of fact, we actually see a trend where the high-end consumers are actually trading up to premium products. Said a little differently, if you have products that are highly differentiated, for instance, we just finished our lobster promotion with all kinds of preparations in lobster, and we're rolling into our Wagyu holiday program, we've noticed that the consumers voluntarily want to go there. And so when I think of a Wagyu steak, we're looking at a 6-ounce steak that may cost $250. Reality is that the high-end consumer will go there, and we have various restaurants that will run out of Wagyu just because there's that much demand for that product. So I do think, again, although the environment is challenging, there's still opportunities in that environment. And obviously, we also see a big window of opportunity in real estate just because there's not a lot of well-positioned restaurant groups right now with an appetite to grow. So I think that we're well-positioned there because we are interested in growth. We do know that if we can navigate through the current environment and position ourselves with a fantastic portfolio of restaurants that we will be well positioned for the recovery cycle, and we plan to do very well in that recovery cycle at some time in the future.
This isn't a niche, really. Like, you have a big total addressable market around the world with both STK and Kona. Can you tell us the total addressable market 10 years down the road? How many units could we be talking about here?
So, very good question. STK is an international global brand. We think that is a 200-unit opportunity, and we've always been conservative there. So we think that there's actually more than that. But just for conversation's sake, that's pretty big, considering that the average volume is around 300,000 of volume a week. So that's a pretty big market for that brand. And then Kona Grill, we think there's 200 opportunities, and those are all domestic. So it's a domestic opportunity for us. And then Kona Grill also gives us a nice spot in the domestic markets where we can go to sub 1 million population markets, and we think that the Kona Grill will do very well in those markets. So we do have a great restaurant concept for big market, and we have a great restaurant concept for smaller markets as we wish to grow them. Although STK has high price points, actually, if you look at our menus and the way that we position the brand, we also have very accessible price points for almost every consumer to play in. So think of our $3, $6, $9 happy hour program, as well as our entry price point into the premium category of steaks is only $49. So we do provide lots of value in there. And for lunch program, for instance, we do $9.99 cheeseburgers, and we do a $19.99 6-ounce filet. So although we like to play in the premium price category, we have actually engineered the brand where we provide a little bit of everything for everyone to play in. And then don't forget the brunch program that we've launched about a year ago, which also has tremendous entry price points into both brands. So again, we do like to play and get the premium dollars, but we're certainly very accessible to all consumers. And one of the reasons why we believe that our growth plan and our growth objectives are very legitimately achievable.
Certainly around the world with STK, you have a huge runway. One of my business partners was spotted in Ibiza this summer, and I believe he contributed to quarterly results. Let's just leave it at that. Switching gears, Manny, I see that analysts write about the business as asset light. What does that mean? Are you company owned in every unit, or do you have partnerships or franchises, or how does that work?
So right now we have been doing company owned stores, but as I look out in the future, particularly for the STK brand, we see a mix of restaurants where we're majorly licensed properties and management properties, which means that we license the brand to someone and then we operate the restaurants for them. So we get into STKs without having to lay out costs or build the property. So that's a very advantageous business model because we're able to grow the brand without having to deploy the high costs of building restaurants. And the reason that the brand is very licensable and we can manage it is because people love the brand. They go into one of our STKs and they, if you're a high wealth or individual who have money and want to have one in your portfolio, well, you can get a license deal with us, and then we manage the restaurant for you. So you do get the best of both worlds. You get STK run our way, meaning that it's a very well-run STK. And then you as an owner of the property can say that you do own an STK. So it's a very good, model for high net worth individuals. And then the second part of that is hotel properties like to add F&B and restaurants that are net attractors. People actually come to the hotel and stay at the hotel on Saturdays and Friday nights because they want to have the vibe dining experience at STK. So we become an amenity and a way for our hotel partners to drive higher room rates because we give them access to the STK with a room night, which is seen as a great amenity by lots of the consumers in these international markets and domestic.
For the One Group, the third quarter is seasonally soft, but this year they're heading into the holiday season with momentum. Manny told me about what they're seeing in their restaurants as people start to gather again for the first time in a few years.
I think my experience and our experience so far has been that offices are definitely back in the city, and particularly on Tuesdays through Thursdays, we have seen a lot more people in suits in the restaurants. And it's also an interesting phenomenon, which is those business individuals have missed each other. So we do see a lot of people not only just gathering, but gathering for a longer time period than they historically have. So that both those trends bode very well for us because we're getting the visits and then we get them to spend when they're with us. So we've been very pleasantly surprised by the robustness of that business coming back. And then you're also now seeing lots of business conferences. So think of cities like Denver and San Diego and Orlando. You're starting to see the return of the mid-size convention business. So that's been a very good additional layer of revenue for us. And so that's been positive. And then last thing that we've been seeing is lots of more demand for holiday parties. So we have lots of people who want to bring the office together for the holidays. And then last year, as a comparison, December was the beginning of Omicron, if you will, kind of the beginning of December. So there was a lot of cancellations and lots of people who decided that they did not want to have the holiday parties for a very good reason. So I think this year, from a comparative, particularly December, should be a good year-over-year comparative on that. And then we're also seeing some bookings into January. So lots of people don't want to get into the event business in December. So we're starting to see a nice book developing into the second and third week in January as well.
Yeah, I think people are going to shoot the locks off this holiday season, right? Lampshades on the head and the whole 9 yards. One of the things that I've talked about with other guests in different industries, Manny, is technology's role. You've been in the industry for so long. What's your take on technology? How do you approach it? What kind of things are you doing to make the experience frictionless for guests?
That's a fantastic question. So the history of the industry is that it's been people dependent, and the reason that it's been a people dependent industry is because there has been an availability of the people to work in the industry, and the reality is today it's not there because either people opted out of the industry because of their closeness to other people, and the pandemic created a new paradigm of what that means from a safety perspective. So some people have opted out. The second thing is there's been a lot of people, particularly the more talented individuals in the industry, are able to go to new industries because they're already pretty well educated, pretty well savvy in business. So they've been able to go to other industries and get either higher pay, but bigger of importance to them is predictability of their lifestyle. So what does that mean is that, particularly for growth companies with us where we think that we have a lot of white space and we need to capture, we're introducing technology everywhere. And it's not just consumer-facing technology, but it's kitchen technology. We have to reduce the size of the kitchens. We have to make the preparation of the products easier. So I would say within the last 18 months, we have lots of projects that we're actively trying to use technology as an offset for people in the restaurants. 2 years ago, you could get dishwashers on call. You could literally just put an ad out and get people to do that. But today, you don't get people who want to be dishwashers. So I would say that the next 5 years, I would say that the industry will transform in terms of the way that they approach operations, with lots of more technology really playing a key role in the business. And that's everything from faster cooking technologies to just data processing technologies, payment processing technologies, temperature measurement, et cetera, et cetera. I think everything that is done in the restaurants will find some level of automation in the next 5 years.
Yeah. And innovation for every business is also key, not just technology, but I know you did a recent deal with Reef Kitchens. Maybe talk about that, even though it might not be a big part of the business today, just another interesting avenue where you're taking the company.
Yeah, we clearly have seen successes in the industry with ghost kitchens, and Reef provide us an opportunity to play in the ghost kitchen category without having to deploy massive amounts of capital. As a matter of fact, very little capital because it's a partnership.
What is a ghost kitchen?
Well, a ghost kitchen is basically a restaurant or a location that has a kitchen, and you're able to prepare different products and market the brand without really having a physical presence as a restaurant typically would. So it's a fantastic way of sharing kitchen capacity and run multiple brands or even a singular brand without having the cost of the real estate. But the view on it, obviously, And why we like Reef is they're big. They have lots of kitchen opportunities, and it's a great way for us to put the brand and test the brand in markets where we don't have a presence with a restaurant, and we're not putting any capital behind it other than intellectual and the marketing that we're doing with them.
I think it's such a cool idea. And talking about like capital in today's environment, a lot of uncertainty. Maybe you could talk a little bit about kind of the company's balance sheet and your philosophy on capital allocation and how you're approaching that.
Yeah, I mean, our philosophy is basically maximize our shareholders, return, and so we're very thoughtful about what we do with the money. So historically, our emphasis has been, growing new restaurants, reinvesting in the brand, upkeeping our facilities. So that's where we've deployed our capital. We're lucky to have cash in the last year and a half or 2 years. We have had that ability to have that access to cash. So more recently, we've announced a share buyback just because, with the conditions in the general market, we thought that was a good way of returning capital to our shareholders. So really the point here being is that we have a pretty forward-thinking board that is always working with management in terms of making sure that we're putting capital where it needs to be. As a matter of fact, a year and a half ago, our growth was exclusively license and management deals. And this year, or the last year and a half, we've gone back to opening company-owned stores just because we're getting back our cash on some of these units in less than 1 year. So again, it goes back to how importantly our board and management views the returns, where we very quickly decided, hey, let's go into the top 25 DMAs because that's a very smart use of capital. We also acquired Kona Grill. At one point, we thought we needed something to grow the middle markets or smaller markets, and Kona Grill was there. So we utilized our capital to do a pretty positive acquisition for us. So again, we're just always looking at it, and we will do whatever we feel it's best for the shareholders, particularly in getting more value for their investment in our business.
In terms of your career, Manny, has there been any kind of big challenge that you faced along the way, and how that kind of formulated your approach to leadership at the One Group?
Yeah, I mean, so great question. Obviously, my fundamental, learning in the industry started at McDonald's, and frankly, I was blessed to having actually started in operations. So I was blessed to work for a company that truly believes in execution. But I would say probably the two other experiences in my life that have been super important is when I joined Chart House back in the late 90s, early 2000s. I walked into a company that had no money. So I learned how to be able to really do a lot with very little. And I learned one of the most important concepts in my life, which is I never want to be in a situation where you run out of money. So it's kind of like one of those stories that for the first 6 months, it really taught me to be super disciplined and really think about the long term. And then probably the most important experience in my life really has been the pandemic and going through having a very successful set of restaurants to having to shut down everything within a 10-day window. And then what do you do with 5,000 employees that work with you, and how you go about managing that in a good process. So that to me was a career event where I really learned what being challenged is in the restaurant space, which is having to shut down all your restaurants and try to figure out what you do next day. So I think those would be the three things: my McDonald's operational discipline, and then not having cash and being successful without cash, and then last but not least, how to handle an event like a pandemic. That would be the three things.
It's hard to imagine anything like going more wrong than the pandemic, but you never know, right? Never say never. Has there been anything in the industry, just broadly speaking, that surprised you lately? Anything that's kind of popped up that you think is either new or different?
Yeah, I mean, I think probably the one thing I have noticed is that the appetite for the industry to take pricing, I've never seen anything like that before. So it's one of those trends where people, and I understand why, the inflation is super high, so people have to protect their business and and how they look at it. But there's been an appetite to take price increase on top of price increase. And I really wonder at what point there is a ceiling on that, because some restaurants have, improved margins by taking price, and in some cases a significant amount of price. So that's been a little bit of what I consider to be a different trend in restaurants that we haven't seen before. And so we'll see how that lends out. And then probably the other thing that I sensed in the industry that's different today is that companies' alignment with guest experience is a little different. In the past, people would think of experience and making sure that the customer got the best they could within the four walls. I think there's a lot more restaurant companies today that have oversimplified their models. They've taken items out of the menus, and so they're taking lots of pricing, and then when the customer comes into their operation, they almost ask for excuse for not providing a good experience or a limited experience. So it's been a very interesting environment where pricing is really taken off, and I think the experience, if nothing else, is at a standstill, and it actually in some cases actually gone to a negative position. So at the One Group, one of the things that we really value is that our mission is to be the best restaurant in every market that we operate, and we do that by delivering unforgettable, exceptional experiences to every guest every time. And I think it's been interesting that even through the pandemic or at the heart of the pandemic, we still live that mission every day. So I think that's probably one of the big differentiators between the One Group and any one of the other restaurant groups, in addition to believing in vibe dining, is that we have an unparalleled commitment to driving long-term success through guest experience, which I think it's the way that will ultimately win the game.
The ups and downs of the restaurant business aren't for the faint of heart, but for the One Group, an aggressive and confident plan for growth and a concept that puts the guest experience first has had a huge payoff. At Welcome to the Arena, we're working really hard to bring you exciting guests and great content. If you found this episode insightful, subscribe to the show on your podcast app and leave us a 5-star rating. The more the show grows, the more interesting voices we can have on the podcast, and in turn, that should demystify a lot of the stakeholders around public companies and soon-to-be public companies. Thanks for listening. Big thank you to Manny Hilario for being on the show today. His career has brought him through every kind of restaurant space and concept and really led him to innovate the dining experience at the One Group. Love having Manny on the show, and we'll definitely check in with him again down the road. This is Tom Ryan. We'll see you next time back in the arena.
References to specific stocks are not intended to be recommendations for specific trading behavior. Comments presented on this podcast are intended for informational and educational purposes only, and do not represent opinions or recommendations on whether to buy, sell, or hold shares of a particular stock. All investors are advised to conduct their own independent research into individual stocks before making a trading decision. In addition, investors are advised that past stock performance is no guarantee of future price performance.